just endless waves, your warm embrace. Fire burns slow. Your touch like smoke, it lingers white. A velvet flame I can't divide. Breathing your name in the dark tonight. Let your fire go. No, no, no. It's all I know. Can't let your fire go. No, no, no. It's in my soul. Your heat's a rhythm my heart obeys. A current pulling through endless haze. The closer I get, the more I crave. Whispered sparks ignite my flames. Every word like a sweet champagne. I'm drowning slow in your burning rain. Can't let your fire go. No, 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 no. It's all I know. Can't let your fire go. No, 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 no. It's in my soul. Whisper my name, feel the flame. It's always the same. You taste like fire, soft and sweet. A slow burn, pulling me deep. Every touch, a stolen sin. Your poison's where I begin.
right, guys, what is going on? What is good? What is good? Welcome to the live stream, everybody. It is Wall Street Wednesday. There we go. Welcome to Wall Street Wednesday. Hopefully you guys, actually, there's no hope. I know you guys had a good week. I know you had a good week. I know you did. Let's say the 28th. Okay. We'll start off with the announcements fairly early. Since we do have the FOMC statement, we have the Fed funds rate in about 51 minutes and some change. And then 30 minutes after that is the press conference, which we will not be here for. But if you guys behave, we may be here until the Fed funds rate. So we'll see. But yeah, since it is the 28th, we are very near the end of the month. What does that mean, John? Nothing if you want to be a lazy POS. But if you are following along with Book of the Month, you should be done today. Today should be your last day. You should have your How to Read a Book by Adler and Van Doren. You should have that done today, chat. Today. You guys have it done? Or have we been lacking? We've been slacking off, Roberto? What's good, Mason, Roberto, AJ, Eric, George, Slowly, 2021, Julius, Eberneth. Where are we at? Did you guys finish it yet? This is where you're at. This is where you're supposed to be at. Okay. But this is what it's like having a schedule, man. A schedule helps keep you focused and on time. Roberto said, I got a couple chapters left. You're blocked. But since you read the article this morning and you thought it was a great read, I will unban you. So you are hedged, Roberto. You're hedged. So, fair enough. Fair enough. Everybody else, you're done. Speaking of everybody else, we will have that book discussion on Friday's member-only live stream. Okay? It probably won't be all that long, but, you know, finish up the book today or tomorrow, possibly Friday before the stream. And, you know, we're going to roll right into... I don't even think I downloaded it yet. I have that same calendar type deal for Maxwell's book. How successful people think. But listen, chat. Excuse me. If you need a month to read a book that I can finish in 4 hours, you have bigger problems. If you need 30 days, February has what, 28 days, I think. If you need 3 weeks for a book I can finish in 4 hours, you have much bigger problems. And I am no longer able to assist you. You need probably a team of people. Currently reading The Magic of Thinking Big by David Schwartz. I've heard of David Schwartz. I've heard of that book. It must be really old. Is it really old, Johnny? But I do plan on reading How to Read a Book after that. No worries. No worries. You guys can read whatever you want. You do realize that, right? I'm not in control of what you read. It's just after reading for a while, I'd say, I don't know, 7 or 8 years now, I was not always a great reader. I would say the majority of the time I was not. But this year I wanted it to be different, as in like bringing back book of the month, but then being able to actually get the most out of your books. I mean, I have videos on like how to take notes and 59? Jesus. I'm gonna comment on that in a minute. Let me get this thought out. I have videos on like, you know, how to take notes and stuff like that. But there's definitely some things that are missing that you can learn in this book. So I'd rather you read this book, and I'm glad we did. I'm glad we did. So let me, Johnny, before I continue, because I have more announcements too. I'm just all over the place today. I barely just woke up, so it is what it is. But let me tell you this. The problem with really, really old books, okay, is they're either going to stand the test of time and be relevant a couple hundred years later, or a couple millenniums later, or they're gonna fade in relevance within a few years. So what I mean is a book written in 19 or published in 1959. So it's probably written between 55 and 58. The 1950s, I don't know much about the 50s. I know our history in America is pretty dark and violent, but I'm pretty sure let me put it to you this way. Over the last 66 years or 67 years, Mason, don't do it. However many years that is between 1959 and today, we have more studies, we have better studies on the mind, you know, the brain, elasticity, and all this stuff. And if there's a book on, you know, thinking big prior to the stuff that we know today, you run the risk of reading a book that is outdated. I'll give you an example. A book on AI written in 2019 or even 2020 is probably already outdated, even though it's only been 5 or 6 years. Because that's technology, and how much we've advanced in the last 5 years, it makes those earlier works obsolete because of the rate of change in technology, but more specifically, like for artificial intelligence. Now you have universal ideas. We have the Bible. We have like Stoic philosophy, right? Control what you can, be indifferent to everything else, stuff like that. It's timeless. That's why we talk about it today still. You see what I'm saying? It's universal. It doesn't get stale or out of date, whereas a lot of technical books do. So that's why I'm very careful to read books that are that old when it comes to the personal development side. Does that make sense? So that's all I'm saying. Their references are going to be old, you know? And you don't know if that book's going to be a classic at the time. I usually only read older books. Hey, well, like I said, it's not a bad thing. It's just I would say read both. Read new books, read old books, read the oldest book, the good one. Okay. But yeah, so how to read a book. We should be finishing that up today. Next month is How Successful People Think by John Maxwell. I'll let you know some of the other stuff I'm reading real quick. Sorry. I know it's not trading related, but I want you to be smart. I want you to be smart. I don't want you to be like the internet is today and retarded. I started this the other day, finished it like a couple of days ago. I'm using Ourselves to Death by Neil Postman. I do reference this work in my latest article. And about halfway through it, I liked it so much, I decided to also get a first edition copy from the 40s, or sorry, from 40 years ago. So I even have a first edition. I know, right? And I'm such a cool guy, right? Maybe not, but having a first edition is pretty fucking awesome. Pretty awesome. And Neil Postman, if you didn't already know this, but he's the same guy who did Technopoly, which was the first book that I finished this year. So out of the 4 books I completed this year, 2 of them were from Neil Postman. And that's why I've been adamant on this sort of anti-technology vibe, less technology, more nature, more reading, more human connection. That's why I've been on that, because this is pretty much all I've been reading. And then what I'm reading right now, which I'm almost halfway done with, is Reader Come Home by Marianne Wolf. Yeah, by Marianne Wolf. So it's pretty good. I mean, I think some of you would find it dry, to be honest, but become a better reader. I don't know what to tell you. I referenced Atomic Habits as well, Mason. I referenced Atomic Habits in my new article. I cannot think of a better book on habits than that one. I have Charles Duhigg, The Power of Habit, but honestly, I never finished it. So, the irony of not finishing a book on habits, right? Anyway, was good, Big James. Reading was never my thing. It wasn't my thing either. Wasn't my thing either. I cannot recall ever finishing a book in high school. I only finished one in high school. It was Night by Elie Wiesel, the Holocaust survivor, which Neil Postman also references as well. Small world. But I'm enjoying reading on self-development. This is something new I'm developing now. Appreciate the good book references on your IG page. Oh yeah, bro, the wall shelf, man. I haven't put all of the best ones on there because I haven't updated it in a little while, but that page is for you. I mean, it is my page, but it is for you to have and to reference. It's free. Just like the articles are free. The emails are free. The fucking live streams are free. Practically everything I do is free. Yet people are still going to hate on it. So, anyway, Sunday night, we talked about being bullish on NQ. Right? Yesterday, we talked about the last few days, we talked about the 123.5 level. Although that missed yesterday, it was the after hours that really did it, right? You see that? 5 o'clock, we open and then just magically run straight up, right? Magically. Guys, when price gets close to a pool of liquidity, I've said this pretty much for like 7 or 8 years now. Okay? Price and a liquidity pool are like magnets. If you hold 2 magnets far apart, nothing's going to happen. You put them closer and closer together, nothing's going to happen. But as soon as you get them fairly close together, bang, they snap. They snap together. Y'all have played with magnets before, yes? Y'all remember when you were a kid, probably you had the alphabet you could toss on the fridge, you know, and then you became a teenager and you started like writing cuss words. Okay, maybe that's just me. But you have what? A magnet here. That's how price operates. That's how it works. That's why I can tell you where price is going to go days before it gets there. You see that? You see how we did that? I know I talked very extensively about this yesterday. I'm not going to repeat it all, but do you know how we came about that conclusion on the daily time frame? Price ran out of old low. We have multiple sets of clean highs. We have a big ass gap up here as well. I did not mention that, but we have an imbalance. Let me go back to the daily and show you. That's what you were looking at, by the way, earlier. You have this imbalance here. We have a no pants candle basically, but you have this gap as well. So when we have an imbalance, we're going to include the gap. We've done this. This is not new. We've always done this. Well, not always, but we've done this for a very, very long time. However many years it's been. Right? And that's where those levels are. And yeah, that's a fat range. It is. But that is the next available imbalance above an old high. The high of my birthday, by the way. See that? It's not that hard. The hard part is the patience, right? The patience to allow this stuff to set up. We created that imbalance in November, or on November 4th. Ran out of old low in November 20th. That's like 3 weeks, like a little like 2.5 weeks later. Then we had a few months of consolidation. We had to create some highs. We had to trade lower. We had to create another low and then run that, right? And then we got our one-sidedness. See what I'm saying? So I tell you these things because that's what you should be taking notes on. Because if you do this, I'll tell you. Okay, I ain't gonna fucking hide. I'll tell you. If you take all the notes I've ever given you, at some point you're probably going to find something that's questionable or something that may even contradict. I'll give you an example because I just thought of this right now. I tell you all the time, when you are working within a range, right? I tell you, when you are at 50%, okay? When you're at 50%, I tell you that right at 50%, it's probably going to be not good trades. You're probably going to take really bad trades, trading near 50% of a range. Higher time frame range, lower time frame range. Okay? So for beginner traders, I've always said, look, if you're at halfway of a range, probably shouldn't trade it. You probably should not. All right? And then later on, when you started learning market maker models, when you started learning about levels of liquidity, then I told you, well, there is an exception to this idea that when the market is poised to go higher, 50% will be a discount. 50% will act as a real support level. It's not what it is, but it will send price higher. But the confusing part, and because like I said yesterday, for some of the newer people here, I know what questions that you have now, and I know what questions you're going to have in the future. Okay? I know this already. So back in the day, when I would do that, trade near 50% and get my shit rocked. Okay? And then I realized, you know, what I'm telling you today, that you shouldn't trade near 50%. But then I started to see, and I was taught this as well, but I also started to see that in certain instances, 50% was actually a really phenomenal idea. But it's sort of, I don't want to say hidden because it is obvious, but it is something will be hidden if you don't know what to look for. If that makes sense. So I'm going to give you an example. Okay. That right there. It doesn't make sense to a lot of people why all of a sudden the 50% level is responsive. It is responsive. But yet it wasn't responsive any other time. Okay? Meaning like it is going to be responsive on an intraday basis, but I'm saying like a touch and go like that. Right? Something like this. A touch and go like that. That's my point. Whereas the 50% here sort of gets disrespected, we could say, because price trades lower and then through it, and then higher and through it. So there's no real respect here. You could say there's a little bit there, sure. Doesn't even tap there. And then here, it's like the same thing. It trades through it, and then it trades above it again. So all of these instances in here, that level doesn't work. It doesn't work. It doesn't work. It doesn't work. But now it does. I mean, is that not something that you've looked at before, or maybe had some sort of question on that? Like, I don't get it. Because what I would do years and years ago is I'd look at something like that and I'd be like, well, if it only works a part of the time, why would I bother with it? So I'm going to focus on something else. And like I said, this is why I explained, I think on the last two streams, why we look for levels of liquidity. There's a small pool here as well. And we look for stuff like lows being taken out. Right? Once we get manipulation, once we're in a discount and leave that discount, then 50% becomes fair value. But fair value in a bullish market is technically a discount. That sounds like a lot. It sounds like a lot to keep up with, but can you drop some ones if you guys understand what I'm saying? When we get into a discount and leave it, okay? When we get into a discount and leave it, then 50% should be fair value. But fair value when bullish is a discount. Fair value, 50%, when bearish is a discount. Because the market, again, is poised to go higher. It's set to go higher. So the 50% wasn't all that important here, but it is important there. Because that's after a run on liquidity. Or sweep on liquidity, sorry. Do you remember that term? Do you remember that phrase? The best trades are right after a sweep of liquidity. Right. That's the difference. That's the difference between, let me back up a little bit. That's the difference between trading 50% in there or trading 50% in here or here. That's the difference. Okay. This one, I don't really know. I think we were in we might have been in a different contract. I don't remember. I don't know what that traded into over here personally. It might have been some sort of gap or something on the weekly. I don't know. But it doesn't like take out anything. That low doesn't really do it either. But this one does. That low here does take out all of those. And then we can go. Okay? So hopefully that makes sense. I've told you for a long time, don't trade near 50%. As a beginner trader, definitely don't trade near 50%. There are very specific times when you can. But you will not know that if you do not understand manipulation, like a liquidity sweep, okay, and trading in the direction of opposing liquidity. There's another phrase for you. Find the liquidity, trade in that direction. Okay, if we have liquidity here, I want to be bullish until we get that. Now, again, the last few weeks or so, we've had that level on there since December. And we've talked about, well, if that's, you know, consolidation, if this is manipulation or whatever, then yeah, this might be the second leg to go higher. And you remember there was some great opportunities in there to go long, but we never got the run on, what is that, January 13th. We never got that run. So when we traded lower, okay, there are going to be times where you might be bullish on a higher time frame and you might just get it wrong. We trade lower instead. You're going to take losses in trading. So then when you see, okay, well, now the low's been taken out, or this low specifically has been taken out, we still have those highs up there. We had this gap. How do we respond to that? Right? How does price respond to that? Well, like I already told you the last couple of days, that gap, neither buy side nor sell side. So once we get buy side, we can trade the sell side price delivery, or we can wait for the sell side price delivery to deliver. Then once it becomes a balanced price range, then and only then, when price is allowed to run, because it's not supply and demand, when it is allowed to run, then it will run. Okay? Did you guys get all that? That's why on Sunday night, Monday morning, it's a lot easier to tell. Or it was a lot easier to tell versus just our opening. It's like our open, then that jam lower. Then it's like, oh, okay. It's delivering sell side. Now it's balanced. Now we're going to run. Then we run. Easy. Easy, easy, easy fucking money. By Monday morning. Buy London or buy equities. If it hasn't hit our higher time frame target on Monday, that's fine. You can hold for the rest of the week. If you're a funded trader and you can't hold, well, then you close that fucking trade, and then you either wait for the open and go long again, or you just wait for the next day's equities and do it again. Simple. Simple, simple, simple. So did you guys learn something today? Did you guys learn something today? 50% can be tricky, big dog. But this is why you have to know other things. You won't know where the market's going. You won't be able to predict where price is going if you do not understand liquidity. You will not understand when price is allowed to run. You will not time the market correctly if you do not know imbalances, inefficiencies, gaps, and what a balanced price range is. You will get stuck in that trap of either buying too early or, you know, buying and taking drawdown before it goes. It's tricky. It is tricky. That was one of my favorite video games when I was a kid, the SSX Tricky. I used to play as a guy named Mac, the snowboarding game. Anyway, we have a strange memory, don't we? We couldn't tell you what we had for lunch 3 weeks ago on a random Thursday, but we sure as shit know what video games we played 25 years ago. Plasticity or whatever, science. But anyway, there's that. Okay, there's that. Here is what I think is going to happen. Okay, for today, I have no idea. As per usual, I don't have a prediction for FOMC for Fed funds rate. I'm not going to try to predict one way or another. I don't make that a habit of trying to predict news. Yeah, I've done it. I've done it a lot. But I'm not doing that today. We already talked about these, right? Buying below the open in bullish conditions, buying below the open in bullish conditions. When we gap higher again on a day like FOMC, after, you know, multiple gaps higher, I would be a little bit hesitant buying below the open. But for the triple Qs, again, we do have all-time highs from October 29th right there, right up here. So Could this trade higher and hit all-time highs? Yeah, it could. Would it be surprising to see a retracement instead? I wouldn't be shocked about that. I wouldn't be shocked. But in all honesty, I just don't know. I don't know what to expect. I have no expectations. I'm not going to be surprised either way. Now, since I'm long, obviously, the biased part of me wants to go to all-time highs. But the realistic part is we could retrace lower, and that wouldn't be a problem. So I just don't know. I just do not know. Okay. If we go to the dollar index, yesterday I had this low marked over here, which was taken in September, and then that was like our current high for a while. That long term, or excuse me, that low, you know, once that's set, that then becomes our longer term low. So I just moved it down here. That low, September 17th of last year, that was taken out yesterday. And today we're sort of back inside this range. So I know a lot of people are probably looking up at this gap here. January 23rd to the open of January 26th. We have had some buy-side delivery, but we lack any delivery between those price levels. 97.33 to 97.46. So if we are going to trade higher, I wouldn't expect us to hit this gap and trade lower. I would expect us probably to get into that, not the lower end, probably the higher end. So I don't know. I don't know. I'm always giving you guys what I think. Y'all never tell me what you think. All right. What type of shit is that? What type of shit is that? Yeah. Euro has that same gap. So I can see it's trading back into the range. Yeah, that's a nasty wick. That's a nasty wick here. What are y'all's thoughts today? I'm always giving you mine. Give me yours. Are y'all still bullish on indices, bearish on indices, bullish on dollar, bearish on dollar? What are we working with, chat? What are your thoughts? As I finish my breakfast. My higher time frame Department of Labor, or draw on liquidity probably, got met. So now I am neutral. Want more data to print. Yeah. You think that's funny, Mason? I paid $144 to the court for a application to take the safe driving course. So that wasn't even the driving safety course. And then it's like, okay, you've been approved. Mr. Flood, you've been approved. Okay. And then it's like, all right, well, here's all the stuff you need. Mail it to us. We don't take email. What type of shit is that? No links, no addresses, no nothing. Just, okay, whenever you get the course done. What course? What course? Is it provided by you? Is it provided by the state? Is it provided by the county? Is it online? Is it in person? Like, what the fuck, man? They don't tell you nothing. They just say, figure it out or you're going to jail, bitch. Wild work in Texas. Wild work. Anyway, I found the website, paid like 25 bucks to take that, and you would not even believe the way this stuff is set up. It's in like 20-minute blocks of time, because it's not, the course is not based on like you take a test or something. You do have to do that, but there's content you have to watch. I don't fucking watch it. You know, fuck that. I'm on Netflix or whatever, YouTube or some shit. And every few minutes, a question pops up to verify your identity. So you have 90 seconds to answer the question. If you get it wrong, your account gets locked and you have to call them and get it unlocked. It is so gay. It is so 2026 fucking leftist democratic level gay. Okay? Got to pay all this money, spend all this time. Because my foot was a little bit heavy on the gas. But yeah, it's like minimum 300 minutes. You know, minimum 300 minutes for the course. So, you know, I don't know if I'm going to finish that or just hang myself, but either way, no matter what I do, that gap is still up here and we still took out a long-term low. So, I don't know if that's going to be souped or if we're just going to go for that. If I had to say, I think it's probably going to run for the gap versus taking out that low. So yeah, but that's why I read it that way, Mason, because the government works in acronyms and it's stupid. It's very stupid. Anyway, I'm going to order a radar today too. So that will no longer be an issue. We really didn't talk a lot about the other indices. I guess let's go take a look at those because I really have not. I really have not looked at. Well, I looked at Dow briefly and I wanted to throw up, so I got nauseous and we had to leave. January 13th high has been taken. That is probably a partial. Not that I'm long ES, but that would have been a partial if I was. And this is why we don't look at Dow. Okay? Look at this chart. Look at this chart, dude. You know what I mean? I know Libre likes Dow. I don't understand everything. I'm gonna have to ask him what he sees because he sees something completely different than I do when it comes to the Dow Jones. But I look at this. And I see the devil, honestly. I look at this and this is Satan. This whole chart here is just Satan. You know what I mean? Only Satan would produce something this ugly. You know what I mean? You've made me hate it. Well, Cameron, you look at this chart and you tell me what you love about this chart. What is this? Look at this. That's definitely an engineered high. Just shy of 50K. That's definitely an engineered high. But like, good grief. This is dirty. This is like the water at the bottom of a garbage bag. Y'all ever took out the trash and there was like liquid at the bottom of a bag? That's Dow Jones. That's this. This is an abomination. There's some equal highs, and then that engineered high for 50K. That I can see is okay. But everything else, what is this? I'd say I'd have to react to Dow. I couldn't predict. Okay? You should predict everything else. React to Dow Jones. You have my permission for that. Because this is I can't. I'm getting a headache looking at that shit. I'm getting an absolute headache looking at that abomination of a chart. I wanted NQ to lag and Dow to rip today. That's odd, Cameron. And then all-time highs for both, but it's just been dirt, and ES and NQ have sold off. Well, that's kind of what I was looking at here a second ago. Was NQ October 30th high is way up here. And again, we did get that high that I already told you about, right? Real big, I told you so. I do that all the time. But that is not all-time highs. And even though these highs aren't like the same, that's still all-time highs. So yeah, I mean, I could definitely see a little bit of a difference there. That's that high, I think, for NQ. So the pullback, like on our current daily candle, that this wick right here, that's not a surprise. Like, that's not surprising. Nasdaq didn't fill in the gap from November 4th today. Fell 3 points short of filling that in. Do you think we go up? We have equal lows at 26.38. Do we? I really have not looked at small time frames today. Come over here. In here somewhere. You might be right. I mean, it's a possibility. It's just hidden in there. What I'll tell you this, since we are at a macro, but we have FOMC today, so I would say that would override the macro. What I would say though, the reason I don't like stuff like this is because, and this is why I say hidden, even though it's not, it's just, like I said earlier, if you don't look for it, you're not going to see it. And that is the sense of the term hidden. But what I mean is, when you have something like this, okay? Give me a second. Shit. Maybe it's control. Hold on. Hold on, chat. Hold on. Okay. I'm going to do a side-by-side comparison so you can see visually what I'm trying to tell you. Okay. Now that we get that out of the way, do you see the difference between these two? Do you see the difference between these two? Like, we have a low being taken out, then a set of equal lows, and then a run higher. Versus, you know, excuse me, price trading lower and then leaving equal lows as the obvious low and then going higher. When I tell you, like, when you guys ask me and you're like, oh, well, those are equal lows or there's equal highs, the inverse would be the same here. I do not prefer that one. I prefer something like this. I want something that is visually attractive. Unlike your mom. If I have to look, really closely, if I got to pull out a microscope or a magnifying glass, if I have to sit there for a few minutes and kind of look at, well, are those equal lows? Are they not? I need to zoom in. I need to use my magnet tool, and I got to see, okay, is this one the same or higher or lower or whatever? This, I look at that and it takes real work to identify whether that's a set of equal lows or not. Versus something like London yesterday. Something like right here. You see how easily visible and clean that is and how obvious it is because we have this price leg lower, bam, equal lows, and then a run higher. It becomes distinctive and it pops out at you. You see what I'm saying? That's the difference between a set of equal lows that are obvious and clear. You can see it as soon as you get to the charts versus something like that. Yeah. So that's the difference. When I'm looking at a price leg, I want the obvious, not the work hard for it. And of course, if we invert the chart, or the scale rather, it's going to be the same for the highs. If we have like a random obscure set of highs prior to a high, I'm not looking for that. But if we have something that's very clean and distinctive, oh, you bet your ass. That's the one I want. That's the one I want right there. And this is also why a lot of the times when I tell you if we're looking at like an engineered high, it's not going to stop at the engineered high. It's not going to do that. It's going to keep going. I don't know when the last time we did something like that is. I mean, you could say these in here, for example. Like, if you have a bunch of highs, right? But you also have a gap, it's usually not going to hit the highs and then run lower. In Wednesday's case, it did. But the majority of the time, it's not going to do that. It's going to extend for something further, for something higher. So a lot of the times when you see lows like this hidden right there, once that gets like met, that is the next obvious low, and it's probably going to run for that. So hopefully that gives you a better understanding. Okay. I mean, you don't have to screenshot this because we have other stuff on here, but if you want to draw your own on your trading view and screenshot that, you can. If it's hidden, I don't like it. If it's clean and obvious, that's the one I want. I want a short for some shit like that, or long for some highs. And that's why, again, not to keep bragging or anything, but that's why when we look back at these, that's why I was so adamant about those. Not because that was the high of my birthday. It has nothing to do with anything. But when I actually screenshotted my friend on Sunday night, the same guy I told you, when I posted that screenshot, he asked me, what did I think? And I said, probably long indices. And then I said, go look at an hourly chart of NQ. And then I went to my phone trading view and screenshotted basically just this. And I said 26,123.5 on Sunday. I said, that's what I think we're going to go for. That's why. Because when you zoom out, right? When you zoom out, you have all this over here. You have all this over here. That becomes obvious. This then becomes super obvious. Then it just becomes about timing it correctly. So are we going to have down days on the way to those highs? Of course. Are we going to have a down maybe week or a couple weeks to take out a longer term low? Sure, it happens. I don't always time it correctly. And I'm not going to tell you every fucking day of the year if it's going to be an up day or a down day. I'm not trying to do that. I'm not trying to do that. Okay? But it just becomes obvious when we have a lot of price action prior to it and a lot of price action after it. Those highs become obvious. So then it's just a matter of, okay, we want to trade in that direction. It's that simple. It's that easy. It's just, once you know what to do, the hard part is then doing it. You need discipline. As much as you think, oh, I've seen this setup before, John, we're definitely going for those highs, I'm going to increase my risk on this one. Don't. Okay? Maybe a little bit, but I would say if your max risk is 2%, do not go over that. Don't go 4 or 5%. Don't fuck yourself up. The worst thing you could do is get it right, over leverage and get it right, and pay yourself really handsomely, and then think that you're the hot shit, and then you're going to go do it again and you get burned. So you've been warned. But hopefully you guys understand a little bit more. Find the liquidity, trade in that direction. But even when you are doing that, don't expect to always get it right. Manage your risk accordingly. Hopefully that helps you. Oh, they both changed. I want NQ on here, and then I want dollar over here. So we can see what takes place. Okay. What do you mean by two different divergences? Well, what do you mean by that? Two different types or two different divergences on the same chart? And honestly, right now, gold and silver have been just, the volatility is absolutely insane. There's so much attention over there right now. If there's a high level of manipulation, the tools that we do use may not always work. That's why there's always that room for error. There's always a room for margin of error, because even though the markets are controlled and they're coded and they deliver perfectly like Uber Eats, you always have a chance of getting it wrong, because nobody can predict manual intervention, manual manipulation. We can't predict that. We can predict price because we use probabilities and we use timing tools. We use time, price, and context. But when it comes to them manually stepping in and manipulating price, I don't know when they're going to do that. And I don't know where they're going to take it either. So, again, it's not going to be perfect. Your trading is not going to be perfect. But when it's the right time to increase the risk, because there are times you know exactly the setup. Yeah. There are times you can increase your risk. As in going max risk. Not moving the goalpost. Well, my max risk is 2%, man, in this setup. Well, John said it in the Discord, so it must go there. No, I'm not the price action puppeteer. You can go full risk. You don't move your full risk. You don't go beyond that. Like one takes the low and the other one does not, but then a short time later the divergence flips to the other asset. Yeah, I don't know. I think if you post a chart though, that would be solid. No matter what you're looking at, 2020, no matter what you're looking at, if you have higher time frame levels of liquidity on your chart or higher time frame inefficiencies on your chart, and if it's, let's say, upside, okay, if you're trying to long, and there's a high probability target, something like really easy highs here, something like that. If there's a divergence or something where this is the dollar, so say the euro made a higher high and dollar made a higher low, that's probably dollar accumulation. So it may not run that low, it may trade higher. So then you could go with that because you have something on a higher time frame, because you have a divergence that indicates strength. Then you can go that way. I don't know if that answers your question, because I don't know what type of chart you're looking at, only what you're telling me in the chat. Anyway, it's pretty much 1 o'clock. I think I've yapped enough for today, but hopefully you guys did learn something. I don't think I finished all of my announcements. Let me go through these real quick, and then we can hop off. Number one, I will tell you, I would expect volatility the rest of today, especially around the press conference. That one, like in about 25 minutes or so, I think the volatility is going to pick up a lot more. So you've been warned. Number two, Friday is going to be our next members only live stream. This is the last free live stream of the week for the public. Book of the month is How to Read a Book by Adler and Van Doren. If you've been following along, that's wonderful. Even if you're not a member, you can still read, obviously. I would urge you to become a member, but if you don't want to be, then that's fine. Next month's book is How Successful People Think by John Maxwell, the GOAT. I met him back in December, I believe it was. I spoke about a few other books that I've already been reading in addition to the other stuff. Reader Come Home by Marianne Wolfe. Reader Come Home by Marianne Wolfe, if you want to write that down. And the very last thing I have for you, since members only I'll see on Friday, but the free viewers I will not see you again until February. I want to remind you that we are pretty much at the end of the year. I mean, the end of the month, sorry. Beginning of the year, but end of the month. The end of the month is a great time to do reflection. Your performance in trading, your performance in your personal life, your reading, your studying, whatever it is that you do, artwork, maybe you're trying to get a job promotion, whatever. Okay? I want to remind you that in Atomic Habits, who mentioned that earlier? Who was that? Shit, I can't remember. Oh, Mason. Of all people. Right? Do you remember, Mason, the Valley of Disappointment? The Valley of Disappointment. Do you remember what that is? Well, let me see if we can draw it real quick. It was something like this, where there was some sort of line and there was like some shit like this. And it's basically this time period where a lot of people go hard in January. New year, new me, go back to the gym, all that shit. And what happens is it doesn't work because people oftentimes will seek intensity instead of consistency. So they'll try to go to the gym, you know, and do like overwork and not like the gym anymore and don't want to go, versus just going consistently. And so because people choose intensity over consistency, they're not getting the results that consistency would bring. So because they've been to the gym for like 2 weeks and haven't lost any weight or haven't, toned their body at all, they quit because they're not getting the results that they want. That is the valley of disappointment. So be very wary of that. Be very wary of that. Again, we're only 28 days into the new year. We're only a few days, we're like 4 weeks into the new year. We got a lot of more weeks to go. We're just getting started. You know what I'm saying? We're just getting started. So if you aren't performing at your best, if you haven't gotten too many results yet, I'm telling you, be mindful of the valley of disappointment. You might be here. This is not the time to quit. Okay? If anything, you should put the pedal to the metal. If you've been paying attention to the stream, that's fucking hilarious, because you know I got a speeding citation. So that's a big pun. Not the rapper, but like that's a really good pun. Anyway, look at your results. Course correct a little bit where you need to, but don't be disappointed because you haven't got the results yet. It took me a long time to get results. Okay? I didn't buy a brand new Corvette when I was fucking 25. Okay? Or 28. So, y'all be good, be blessed. Everybody that's free, I will see you in February. I will see you on the 2nd, right? February 2nd. For all the members here, you will get a market review tomorrow on Thursday the 29th. And you will get the next live stream on Friday the 30th, our book discussion. So don't do anything stupid. I'll see you guys next time.
Searching for a reason, a hidden sign. Your heartbeat echoes through the floor, a rhythm that I can't ignore. Every move, it pulls me near. Every breath, it clears the fear. Tear down The air is thick with memories, each step a crack in the melodies. I chase the echoes, but they fade too soon. The clock ticks loud, the night stands still. The space between us bends at will. Your shadow